All right. Welcome to the homework help for chapter 5. Go ahead. We're going to come down here and we're going to access the problem assignment here. Click begin. Got 10 questions to answer. Got a chunk of them as multiple guess. See if we can guess which one was the start. Nope. 7, 8. There we go. Number 9 is our first problem here. Like I said, I do let you guys do the multiple choice on your own. But if you have any questions on the multiple choice, you're always welcome to ask. Valley Company's adjusted account balance from its general ledger on August 31st. Its fiscal year as follows. It's categorized the following accounts as selling expenses, salary, sales, okay, blah, 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 blah. Thank you. Beginning merchandise inventory was $25,017. Supplementary records of merchandising activities for the year ended is there. Okay, compute the company's net sales for the year. Compute the company's net sales for the year. All right, net sales. So we're going to look at sales. Our sales was 212,040. 212,040. And we're going to take out sales discounts and sales returns and allowance. Oops, not add it, subtract it. So sales discounts, 3,244. And then returns and allowances, 13,995. Okay, so let's go ahead and pull up our calculator. And we're going to take 212,040, subtract out sales discounts and returns and allowances for a total of 194,801. 194,801. Check our work. And we're doing pretty good. Not complete because we got requirement 2. Cost of merchandise purchase. I got to zoom out a bit here because this is really squinched. And what I need to do is I think I need to, well, maybe not. All right. We're computing the company's total cost of merchandise purchase. So basically, how much did we purchase in merchandise inventory? All right. So merchandise inventory ending. So we may have to come up with a funny way or a little back way of doing this. All right. And this is kind of testing to see if you understand that slide I showed you guys in the video on cost of merchandise available and stuff like that. Okay, so let's do this. I'm splitting it out. So our ending balance is going to be, and I'm going to do this in a T account. Oops, let's do it right here first. Because I love T accounts. Boy, do I love. Oops, I just don't like drawing them, I guess. There. Love T accounts. All right. So our ending balance is 31,000. Okay, let's go down and find out what we had in this other information down here. All right, invoice costs of merchandise purchases. So we're going to go ahead and we're going to throw in here 91,140. Discounts received 1914. Returns and allowances 4375. Transportation in. So that's going to be an addition 3,900. So what was our beginning inventory here? We're going to take I just take the sum of these, subtract out the sum of these, see if this works, and subtract out our ending inventory. So our beginning out balance was this number. Let's do this in dollar signs. All right, so let's see if this math works, okay? 57,751. We're going to take this plus this minus this. I don't think this works. Let's see, that's how you can test and see if this is wrong. I think I had to add in C11, not subtract it. That's where I went wrong. Okay, so we got 119. We add in these, subtract out these. Oh, wait. And then subtract. Oh, no, because it's supposed to equal 31,000. I know what I screwed up on. I forgot cost of goods sold. Duh. See? Cost of goods sold is going to be 82,768. Now let's do it. We'll probably get that better off. Okay. All right. This is got to be equal to this plus sum of all of this minus the sum of these. There we go. All right. So this is our beginning balance. Purchases. This is freight in, so it also counts as purchases. This is these offset purchases. And this is cost of goods sold. And this is perch. So what was the question again? Let's go ahead and see. I know this is kind of me setting this up for stuff that I didn't need to do. Yeah, all right. I'll return to question. Requirement number 2. Invoice cost of merchandise purchase. Oh, I guess I kind of overthought this. 91,140. Purchase discounts received. Purchase returns and allowances. Cost of freight in. Total cost of purchased merchandise. Yeah, I guess I overthought this one. But still. Should be able to do what I did anyway. So it should be 88,751. Okay, good. All right, next we're going to create the multi-step income statement. So remember the multi-step income statement, similar to the, oh wait, it's not, no, it's the balance sheet, never mind. Multi-step income statement, we'll go ahead and get on. We're going to go ahead and start over here. Let's return to the question first. Multi-step income statement, okay? Start over here. What do we start with? Start with net sales. Sales, but it doesn't say net sales for some reason. Got me concerned. 212040. Now it'll probably have discounts. Yeah. So we're basically recalculating what we did at the beginning. Less discounts, less returns and allowances. Cost of goods sold. Gross profit. That's kind of what we're looking at here. So cost of goods sold, I have it over here. I typed it in there, so that's helpful. 82,768. Discounts and allowances. Those were our purchases. Those did not include over here. So let's go up. No, really, let's go up. So we have discounts of 32.44 and 13,995 for returns and allowances. 32.44, 13,990. Oops. 13,995. Okay. This one's going to be net sales. There we go. I was wondering where that was at. All right, so we're good all the way down here. Now let's do selling expenses. We're looking for anything that is considered selling. So we're not worried about all that stuff because we're not dealing with assets and liabilities because we're not dealing with the balance sheet. We're dealing only with the income statement right now. So don't get caught up with that. And let's see, I remember something in the header that we needed to read about. Okay. Follow accounts or selling expenses. So let's just write this down over here. Selling admin, selling expense, sales salaries, rent expense, selling space, store supplies, advertising. Okay, so those ones are our selling. Everything else is going to be our admin. So let's go down here. Let's get me some of that. Let's do Alt print screen. And I'm going to open up my Paint program now so that I can just see which ones I need to see. Let's go ahead and zoom. Oops, we want to zoom out. All right, there we go. Yes, I still want the homework. Okay, let's come down here now, and we're going to make this go pretty quick, hopefully. Selling expenses, all right? We've already identified which ones they are. We said sales, salaries, expense, and that one was 29,049. Then they said rent expense for selling space. Selling 9966. Store supplies expense 2544. Advertising expense. I'm pretty sure that was it. Okay. Let's go to do the general administrative expenses. We have office salaries expense 26,505. Rent expense for office space 2544. And then office supplies expense for 848. Okay. Total expenses. And then this is going to be our net income. Hopefully it's a net income. Actually, I'm going under the assumption it's going to be a net income. 112033 minus 89,479. 22,554 should be the right answer. 22,554, right? Okay, let's check our answer, see if we got it. All right, it's looking pretty good. Not complete yet, though. We got to go to number 4. Okay, this is just the single step income statement, right? This one's just what you're used to, okay? So we're going to go over here. We're just going to do net sales, which we already calculated. I'm not going to reinvent the wheel. Net sales is 194,801. 801. We're going to come over here to sell, to cost of goods sold. Then we're going to go to general administrative expenses. See, we're gonna basically sum up all these selling expenses. So we're gonna come over here because we already did it for us. Cost of goods sold was 82,768. No, I'm gonna do this. Oh, we already have cost of goods sold. So then selling is right here. $59,582. And then 29,897. 29,897. All right. So now we got all the info we need. Okay. Cost of goods sold. I'm just going to bring this over to my other screen so that I can see it while I'm doing it. You'll know I pulled it from there. Cost of goods sold was 82,768. General administrative expenses. Oops. General administrative expenses were 29,897, and selling expenses 59,582. I don't know if it's gonna cry if I because I didn't categorize them in the same way as we did last time, but I really, that's gonna be grasping at straws if that's the case. 194,801 minus 172,247 should have gotten the same thing. 22,554, that is 22,554. Let's check our work. We should be good to go. Money. All right, good. Oh no, I already have this assignment open. No kidding. Okay, well, oh, nope, not the quiz. Not the quiz. Jump back in there. Now, because I'm the professor, I don't know if that's going to show that says continue. So I'm hoping that problem 9 is still done for you. Okay, didn't save for me. Hopefully it would save for you in that situation, because that'd be frustrating, and I totally get it if that does happen. Okay, I hope it doesn't for you guys, because that would suck. All right, let's go on to problem 10. Really, problem 10. It's really hard to talk to myself, especially when the screen freezes like that. Give me a second. I'm going to pause the recording so that I don't spend too much time waiting. All right, here's number 10. This is a beauty. Oh man, I'm already getting excited. I love this one. This one's like a really cool problem. This one you're gonna be basically running a company. I mean, you got a lot here, okay? And so this is similar to the stuff I covered in the snippets. I'll go ahead and do a couple of these journal entries just so that you can kind of get your feet wet and get moving on this. Probably not gonna do the full amount on this one, okay? Because this is the crutch of what you need to know, and I need you to show that you know that and not just copy from what I'm doing here. But let's go ahead and start on August 1st. We purchased merchandise from Aaron Company. Now, in this situation, again, I would recommend you keeping a tracking T account list. I'm going to keep it off list because I've already shown you how to do that in the snippets and everything. So, and in the other problems. So you can you can do that here if you would like. I'm setting it up right now. So I'm going to go accounts payable for ARON. And then let's see, we sold to Baird. Let's go accounts receivable, BAIRD. Accounts payable for Waters. Waters, Aaron, Baird, Waters, Tux Company. Sold to Tux. So that's accounts receivable to Tux. Okay. So I'm setting it up here. Accounts receivable Tux. All right. So I'm going to bring this over here just to show you kind of what I did. I made these T accounts like this, and that way I can track and identify where I'm at with each one. So purchase merchandise from Aaron Company for $5,000 under credit terms 110 net 30 FOB destination. Invoice dated August 1st. So FOB destination, who owns it in transit? They do, not us. We bought it from Aaron. We're not gonna have ownership until it gets to us. So we're not paying crap, what was that? My calendar. No. All right. Purchase merchandise from Aaron Company 105. Okay. So basic formula. Okay. Merchandise inventories are debit for 5,000. We're crediting accounts payable for Aaron. All right. Now I'm going to come over here. Oops. Let's just do this real quick. 5,000. And then I'm going to come over here to Aaron, credit 5,000 to Aaron, because I want to know how much the discount's going to be. So I got to keep track of it. And I'm not going to check my work after every one of these because that would be too long. Sold merchandise to Baird Corporation for $3,500 under credit terms there, dated August. Okay. So now Baird Company coming over here. I'm going to put that over here as they owe us $3,500. Again, your numbers could be different too. So we're going to go accounts receivable for Baird for 3,500. And then we're going to credit sales for 3,500. Too easy. Those ones are too easy. Oh, I clicked check my work and I didn't mean to. Okay, so there's where we're at right now. Let's go to problem 3. Recorded cost of merchandise sold of $2,000. So this is still dealing with the Baird company that we just did. So we're going to do cost of goods sold for 2,000. And then we're going to credit merchandise inventory for 2,000. Next. Purchase merchandise from Waters for 4,000. Okay, again, we're going to just do this. Merchandise inventory for 4,000. Credit accounts payable. We're looking for Waters. 4,000. All right. Let's see if we get into one of them here. Paid $210 cash for shipping charges related to the August 5th sale to Baird. Okay. FOB destination. We sold this to Baird. We paid for it. FOB destination. This was something we sold. This is a selling and administrative expense. We're not dealing with inventory on this. So we're going to do it's probably shipping. No. All right. I don't know what they're going to call it. I'm just trying to guess it. Delivery expense. There it is. Delivery expense. $210 cash. $210. All right. Hopefully this one's a good one now. All right. Baird returned merchandise from the August 5th sale that was sold for $1,000. So we got to get rid of that sale of $1,000. Baird, we sold them for $3,500. They're returning 1,000 of it. So we've got to get rid of that out of our accounts receivable. So we're going to go sales, returns, and allowances for 1,000. And then we're going to credit the accounts receivable for Baird for the same amount. Now, the next journal entry is going to be recording the merchandise that was restored to our inventory because we didn't no longer sell it. Merchandise inventory for 500, and we're crediting our cost of goods sold for 500. Okay. After negotiations with Water Corporation concerning problems with the purchase on August 8th, Lowe's, who was us, received a price reduction from Waters of $400 off the 4,000 of goods purchased. Lowe's debited accounts payable for $100. Well, good job, Lowe's. That's what you're supposed to do. So we're going to go Waters, accounts payable, 400. And then we're going to do merchandise inventory because this is stuff we bought and we don't owe it anymore. So let me go ahead and update this to Waters. Oh, crap. I didn't write down what Waters was. Let me go back up here real quick. I'll purchase merchandise Waters for 4,000. And then we just got a credit of $400. And then the Baird returned 1,000. So I got to do that. All right. So I'm kind of kicking this butt for you. Don't want it to be too easy. I mean, I want it to be, something you guys will work on. At Aaron's request, Lowe's paid $320 cash for freight charges on August 1st purchase. At Aaron's request, we bought this, and they paid it, and they reduced the amount owed to accounts payable. All right, this one's kind of a little bit of a monkey wrench for you. We bought inventory from Aaron. It was going to be charged to merchandise inventory. Sorry, we had accounts payable. Aaron, we owed them $5,000, but they said, hey, we'll give you a credit on your accounts payable if you pay this $320 in cash. So we're gonna credit cash. Sometimes you just got to think it through. We're just gonna credit cash because we know we're paying that for them for $320, and we're reducing our accounts payable. We're not dealing or touching the merchandise inventory because we already did. We're reducing what we owed them by doing them a favor. It's just like instead of paying for the freight charges, we just sent them the $320 cash and then they paid it. It's no difference. So we're not going to deal with our merchandise inventory in that situation. Okay. All right. Let me get to the next one. Had a lot of fun little situations. Received balance due from Baird Corp for the August 5th sale, less the return on August 10th. So let's look at Baird. I'm going to pull Baird over here a little bit so we can kind of see what I'm doing with Baird. All right. So Baird Corporation, we received the money that they owed us. This minus 1,000. So right now they owe us 2,500. But let's go ahead and see. This is August 15th. That's within 10 days. Did we give them any terms? We sure did. 210 net 60. So they're paying within that 10% discount period. So let's go ahead and look at this. So now how much are we going to discount them? We're going to go ahead and we're going to multiply this by 0.02. And so we're discounting them $50. So we're actually in cash only going to receive $24.50. Let's go ahead and do that journal entry down here. Cash, $24.50. Sales discounts for that 50, and then accounts receivable for Baird owed us 2,500. All right, so now I'm going to check my work and see how we're doing on all these journal entries, see if I screwed anything up. Okay, looks like we're doing good. It's not complete, but we're doing really good, okay? So that should get you started. You only got like 6 more transactions to do. Let's see if I can do one more on this for paying some of those people we did the work for. Paid the amount due Waters Corporation. Great. Let's do Waters Corp. So Waters, we had that $400 reduction when we negotiated them. So right now we owe Waters $3,600. And then we bought on August 8th. Terms 110. And it was August 8th. And this is August 18th. Again, within the discount period. So we get 1% discount on the Waters purchase. Cheapskates. All right, so we're going to go ahead and multiply this by 0.01. We get a $36 discount on this. So we're going to credit or debit our accounts payable for $3,600 for Waters. For $3,600. And then we're going to credit merchandise inventory because we are going to reduce it by the amount of money that we got the decrease for, $36. And then the remaining amount is going to go to what we're paying in cash. So let's just whip out our handy dandy calculator here. 3,600 minus, I think it was $36. Yeah. Okay. So it's cash is 3564. All right, let's go ahead and check our work. Let's check that last journal entry there. And we're looking good. So you've kind of seen how everything works. Go ahead and finish this up, get it turned in. If you have any questions, please let me know. Remember to click the submit button on your assignment so you get credit for it. Otherwise, we'll see you guys in the other videos. Take care.